Tesla stock is popping today off of FSD News. Is this the catalyst the stock needs for bulls to come back? I'm going to break down the details and provide you with predictions, not only on the stock price, we'll look at a chart later, but also how much revenue could Tesla bring in from FSD subscriptions, and how could it impact the bottom line and the stock? You've heard me ask this question before. Is Tesla a car company or a technology company? If you say it's a car company, I'd ask you this next question. Could a car company do this? Now, what you're seeing here is Tesla FSD Beta 12.3.1 in action. This is a test drive. And the channel on YouTube is called Black Tesla. This is a Model S Plaid, and he has full self-driving enabled. Now, later we'll talk about what full self-driving means. And you can see the vehicle is going through numerous turns. It's making decisions as it's driving through an environment. Now, tell me, is this a car company or is this more of an artificial intelligence company? Can just any old car do this? You already know that Elon Musk calls Tesla an AI, an artificial intelligence company. So let's talk specifically of what's going on here at Tesla. There was an email leaked from the company that I'll show you. Headline, Tesla to require supervised FSD version 12 test rides during vehicle deliveries. This is a leaked Elon Musk email. And here it is. Going forward, it's mandatory in North America to install and activate FSD version 12.3.1 and take customers on a short test ride before handing over the car. Almost no one actually realizes how well supervised FSD actually works. Notice the emphasis here on supervised. I know this will slow down the delivery process, but it is nonetheless a hard requirement. Thanks, Elon. And this part's huge. This is an actual response from Elon Musk on X. All US cars that are capable of FSD will be enabled for a 1-month trial this week. So this is a free 1-month trial of FSD this week. And just in case you're not aware of what FSD is, I saw a few comments on social media today. People didn't even know what it is. People that own the stock. So FSD stands for full self-driving. But what does that mean exactly? So autopilot is an advanced driver assistance system that assists your car with steering, accelerating, and braking for other vehicles and pedestrians within its lane. It assists with the most burdensome parts of driving and work alongside features like emergency braking, collision warning, and blind spot monitoring.
A video of a man inside a self-driving Tesla Cybertruck wearing a virtual headset is going viral.
The video appears to show a man using his hands to operate his headset instead of his car.
Everybody was concerned that I was like sending emails or actually using some of the applications that are on the Apple Vision Pro.
Now, you've seen the videos out there, people driving down the highway with the Vision Pro. You've maybe even seen another website where a gentleman's driving a car and gets romantic with his girlfriend, perhaps. But it's not the intent. With FSD capability, you'll get access to a suite of more advanced driver assistance features designed to provide more active guidance and assisted driving. This is basically saying that you still have to supervise it. You're still in control of the car. You can't just read a book or go to sleep or something else. Bruh. And here's the pricing. And this used to be different, but currently $199 per month and $99 per month. Okay, so you're up to speed with FSD and what's going on with Tesla. But why is Elon Musk doing this in the first place? And what implications does it have for Tesla's stock in the future? Headline, Tesla stock leaps as Elon Musk pushes key technology tied to profit boost. Tesla shares moved higher in early Tuesday trading as the car maker moved to promote one of its key technologies and potential profit drivers ahead of next week's crucial first quarter delivery figures. Of course, the reason why the stock has been underperforming, it comes down to deliveries and it comes down to profit margins. If you remember this chart, operating profit, you can see that Honda Motor is actually higher than Tesla, 8.53% versus 7.55%. Musk has often said, however, Tesla is more than just a car maker. You've heard us talk about this many times on this channel, and he's touted the potential of Dojo supercomputer, its AI ambitions, and its lucrative energy storage division. And of course, moonshots like Optimus, which isn't even mentioned here. This is a quote from Elon Musk. Tesla should really be thought as roughly a dozen technology startups, many of which have little to no correlation with traditional automotive companies. So is it a car company or is it a technology company? So if you remember earlier in the email from us, almost nobody actually realizes how well supervised FSD works. So of course you're a smart person and you can figure this out. Tesla's trying to promote FSD to get more people to sign up. In fact, it's the next phase of Tesla's growth. Not only is it the next phase for growth, growth, but it could completely change the game when you think of profit margins. And we'll get more into that story later. But when you think of Tesla as a technology company versus a car company, Tesla's claimed to have data based on around 300 million miles of driving. Now, that takes a significant amount of time, energy, money, effort, and other car companies just don't have this. Musk said last year it would soon be billions of miles and tens of billions of miles. They're tracking this data, and they have for years. Not only data from the cars, and the cars talk to each other and talk back to the mothership, users that are going through beta, they can actually flag different things that they don't like so that Tesla can make improvements. So the impact could be huge. Let's just say you have a $45,000 Tesla. In addition to that, you could spend $12,000 for FSD. And the beauty of this, of course, when you think of the monthly subscription at least, it's recurring revenue. So like software as a service, of course, different, but not only can Musk and Tesla license this to you and me, he can also sell it to other car companies. You see, Musk is very open to licensing FSD software and hardware to other companies. So now we're talking about a technology company. We're talking about a SaaS type model, subscription model, recurring revenue. And of course, the margins are very profitable on this type of service. How much revenue could FSD actually bring to Tesla on an annual basis? Let's look at some numbers and predictions. But first, it's important to know what the current take rate is. And according to this, about 14% of Tesla customers are buying the package. That's in the third quarter of 2022. Now, that's down from a record high, 53%. Back in 2019. So it's very obvious what Elon Musk is trying to do by giving you a free trial. Not only the free trial, but also requiring every delivery to understand that the service is there and available and the capabilities of that. So I'm going to show you a few different examples. The first one being in Discord from a VIP member. His name is Derek. He is our in-house Tesla guru. So Derek's saying that Tesla put out 2 million vehicles since the 1st of January last year to now. FSD is $12,000 currently. At a minimum, I think FSD will see 50% margins. I personally think it'll be higher than that, with a potential margin as high as 90% plus. I think it'll be more like software in that 80 to 90%. That's just my prediction. So at 50%, and he's being conservative, he's saying, let's just say Tesla has a 10% take rate. That's 200,000 vehicles at $6,000 in pure profit. So in pure profit, Tesla would bring in $1.2 billion. That's at 50%. And that's just Tesla vehicles from consumers, not with the OEMs. FSD profits could double, triple, quadruple, etc. And one thing I already mentioned about this is recurring revenue, and that's a completely different thing than margins on a car. Now, one thing I want to clarify, if you're not familiar with how the Tesla FSD pricing works. So basically, it used to be $15,000. Now it's $12,000. So you can pay $12,000 up front and not pay that monthly fee. So then it wouldn't be recurring, or the monthly subscription. And that's going to be the $99 or the $199 that we talked about. If you buy the entire system, the future updates are also available for free. Now, most people are going to probably do the monthly subscription, but depending on the math, you might want to go with the $12,000 up front. And Tony C in the place to be, he's our first patron ever. He said $200 a month seems more accessible than one time versus paying a lump sum. And another great point that Tony makes is about OPEX versus CAPEX. That will be a cash cow, and I agree if it happens. Now, Gene Muster, who's an analyst at Deepwater Asset Management, he's been a long-time Tesla bull. He says that licensing the FSD technology could generate as much as $20 billion in annual revenue within 5 years of the first agreement. And this will rely on those OEMs. So in other words, licensing FSD to other car manufacturers. And of course, we already know about Tesla chargers, superchargers, and most car manufacturers are adopting the Tesla standard. Here's just another take on X. Outlook for FSD Tesla, world average price for FSD, $10,000, 4 million cars, 50% adoption, profits, $20 billion. I personally think it'll be somewhere between what Gene Munster is saying and maybe what Derek is saying. I do think it'll improve those margins dramatically, and it could be the next catalyst that takes Tesla's stock higher. You can see the stock has lost some steam towards the end of the day. It's up about 3.7%. It was up over 6% at one point. Profitability metrics, according to Seeking Alpha, A+. Growth is a B. Now, forward revenue growth about 17.39%. Valuation is an F. Well, again, this is going to come down to, is it a car company or is it a technology company? Now, regardless, the forward gap PE is a 74, and the TTM peg gap is going to be 2.14. And Tesla is bringing in $106,000, over $106,000 net income per employee. 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 $106,000 net Next, we're going to look at a chart. Now, before we do that, if you want to take your game to the next level, join us in our Discord. You can join us by visiting patreon.com/firedupwealth. If you're new here, please subscribe to the channel, click that bell for notifications. And if this video helped you at all, please drop me a like and drop me a comment. Let me know what you think. So next, we're going to look at a chart. And if you remember recently on a video, I said that this was a buy. Tesla's a buy between 165 and 175 DCA. And I said that it could go lower. I personally like the 165 to 175 range for dollar cost averaging. This got a little bit lower, around $161 a share, and it looks like it has a short-term bottom in. I think the stock's going to go over $200 a share. Look for 195, 200 to 203, and possibly $210 to $215 on the upside. Now, of course, we're going to have delivery numbers coming out soon. That could make the stock roll over and go the other way. And I could certainly see this stock under $150. It's even possible the stock could go under $100. I'm a long-term investor and I use DCA, dollar cost averaging. If you're new, subscribe to the channel, drop a like and comment. Thanks for watching. Take care.